Hello, everyone, and welcome back to another episode of the Security Token Show. It is episode 241. We have a whole slate of amazing things. I'm your host, Kyle Sonlin, joined by my co-host this week, Jason Barraza. Jason, how are we doing?
Doing fantastic, Kyle. As always, excited to see a week full of news to cover. Lots of exciting stuff going around all places around the world. So without further ado, what do you say we get jumping into the market movements?
Let's dive right in. All right, Jason, to kick off our market movements this week with our top pieces of news. The first one I have to bring to the table this week is KfW Bank. They are a German bank that issued a 4 billion euro bond via Clearstream, which is the platform launched by Deutsche Börse's D7. And so this is now the largest bond issuance to date, which surpasses that $756 million green bond we saw from Hong Kong last year. And this bond, which is a 3-year bond with a 2.75% coupon, was, as I mentioned, on that D7 digital securities platform that was launched by Deutsche Börse. That being said, Clearstream is the company and the issuer behind, or the issuance platform, behind this platform. This issuance. So there's a little bit of a group effort here to get this product to market. KfW Bank is the actual issuer and underwriter behind the bond. And this actually is the second digital transaction launched by KfW. So they're really stepping up their game here in the digital asset space. And D7 certainly has done a lot. We noted in the articles that they've done 35,000 digital issuances, totaling about 3.5 billion euros to date. So I guess this almost doubles their issuance size to date. So this is a pretty cool product. Another issuance in the Euro region of the financial sector. Jason, do you have any thoughts on this article or this topic?
It sounds like it's a new king for Germany here, the 4 billion euros here. We track a lot of bonds on stm.co, and if you go to our charts, there's an interactive map that shows, different bond issuances around the world, by country. And if you hover over Germany, I used to say, Deutsche Börse was the one that put Germany on the tokenized debt map, if you will, through a $3 billion issuance they had done. It was a corporate issuance where Deutsche Börse was the actual issuer. Looks like we have a new king, though, here at 4 billion euros. Really interesting to see. Again, the other trend that we're seeing also in tokenized debt is that a lot of the times it is institutions issuing to other institutions, or sometimes even an institution in one arm issuing to another arm within the same institution. So the one thing I will say is, while this is extremely exciting, I also want to start seeing more debt being issued to individual investors and be a little bit more accessible. But nonetheless, it is a lot of cash coming on chain. So really cool to see here.
Totally agree. What do you have?
Next on the docket here, we have Arbitrum. Their STEP program, released their recommendations for who will get some grants, here into their, as they try to diversify their treasury here. And so out of 30 applicants, we had 6 that were chosen by the STEP committee for grant allocations. The first one being BlackRock's Biddle, issued via Securitize for 11 million ARB. The next 2 were for 6 million ARB each. It was Ondo Finance's USDY and Superstate's USTB. And then the next 3 were for 4 million ARB, which were Mountain Protocols USDM, 4 million ARB, as just mentioned, as well as Open Eden's T-bill and Backed Finance's BLB01. So, these are recommendations. At the end of the day, the DAO still has to vote and make sure this gets approved. So that will happen on July 1st. That's this coming Monday. So if you are part of the Arbitrum ecosystem, keep an eye out, do your due diligence, and see how you want to vote. Any thoughts?
Yeah, this is just another blend of DeFi and TradFi. We certainly have some of the finalists with respect to institutional tokenized products. Shout out to BlackRock and Ondo, Superstate, Mountain, Open Eden Labs, and BackedFi. All of them launching tokenized treasury products, which have actually been cited by regulators and congresspeople for being a strong driver of debt in the US market. We know now that stable coins and a lot of the DeFi ecosystem represents the 15th or growing largest buyer of US Treasuries. I only see that continuing as more and more of these protocols and institutions begin to connect together more efficiently and continue to drive value into this ecosystem. So this is a really cool one to see. Arbitrum being a very DeFi blockchain platform, issuing grants into these different tokenized products where they're actually providing the token, the ARB token, into these fund products. Interesting to see from my perspective if these fund products then just directly sell those Arbitrum tokens to receive the cash, which then they fund their products with, or how this interaction happens. I'm not totally sure. I think this is one of those things that in my mind just like doesn't fully add up to date. I'd be interested to try to do some more research and better understand what these tokens are actually doing for these treasury products. Of course, you can't buy a US Treasury with Arbitrum tokens. So there's going to have to be some sort of process there, whether it's selling those on the open market or whether that's locking them up and receiving the stable coin as collateral and then allocating that collateral appropriately. And then the other question, I guess, goes down to how does this then translate back into the Arbitrum ecosystem? What is this really doing for Arbitrum? Is it essentially incentivizing those products to build more pathways into the Arbitrum ecosystem to generate yield for their underlying users? Or is there some other method here to the madness? I'm not totally sure. These are some of the questions that immediately come into my head.
Those are the key questions, Kyle. I think you're right on, hitting it the nail on the head there with in terms of, building more infrastructure in the Arbitrum ecosystem to support some of these assets. We've already, all of them, by the way, are on Ethereum. And so, we've seen USDY start expanding to others, Solana via Drift just last week, I think we covered, as well as USTB started being used as collateral on Falcon X, right? So through this, I would imagine that Arbitrum is really trying to incentivize all of these different products to, again, build infrastructure and build more use cases for the Arbitrum blockchain.
Yeah, totally agree. And into mine, Jason, on the same topic of having a distributed ledger blockchain solution, I actually wanted to cover the fact that SocGen, Societe Generale, has joined JP Morgan, DBS, BNY Mellon, MUFG, as well as other institutions alongside the Monetary Authority of Singapore in launching that first phase of their global layer 1 initiative. They're calling it the GL1, which is a public permissioned distributed ledger network for the financial industry. So they've gotten all kinds of big players involved, JP Morgan and Citi and others. And the goal here is actually to create a single network that allows for many of the financial functions we've covered here on the show for years now, including trading, settlement, payments, and collateral management across multiple asset classes. Presumably, that means equities and debt and potentially even digital assets and cryptos as well, all operating on the same framework. This is obviously a testing environment. The Monetary Authority of Singapore is known for having their sandbox style of situation where you can build test nets and testing products under the cover of the regulators and as well as in a, let's just say, a trivial environment with respect to the actual assets being used in collateral and all those different components. You're not using real money, right? But the goal here is to develop those common standards for tokenized securities for interoperability, which we've been talking about for so long, not only cross-chain, but also cross-asset. The fact that today equities and debt and these different products are treated differently with respect to their financial transactional mechanisms, I think is not efficient, and it certainly isn't effective for global financial markets. The future plans here that they noted included setting up actually a nonprofit that's going to operate the network. So we've seen this before from traditional blockchains, setting up that quote unquote foundation and having that foundation be the one that supports the blockchain ecosystem, with preliminary indications favoring Ethereum or potentially even Base due to its widespread adoption among participating banks as that kind of underlying fabric that they will then build their permissioned layer 2 on top of. So that's kind of where a lot of the banks are moving. We've seen all of these different institutions build their own applications like GSDApp, like the tokenized collateral network from JP Morgan, like, the Forge product. And so from Societe Generale, and of course, there's dozens of others. So a lot of these different banks have created digital asset platforms. Now we need to essentially connect and plug those into each other. And that's what the Monetary Authority of Singapore is trying to do here with Global Layer 1.
I like it a lot. I mean, again, all these institutions, right, they have to walk before they run. And so, through their own, private blockchains, they've been able to do some testing. Maybe they open it up to one or two partners to do, some kind of, proof of concept, which we've seen multiple of. We've also seen a lot of consortiums come to light. We've seen Canton as a very popular choice one. We've seen, I think, what was the other one? Partior, I think, and then a few others. And so cool to see this. But this is, again, it sounds like they're really trying to build one blockchain for all institutions to kind of be, I guess, conform to and decide this will be the standard for transactions on chain, especially for security. So curious to see who else will jump into the mix here. But these are already heavy hitters, as you mentioned, Kyle. I mean, JPM, DBS, BNY, and so forth. So really cool to see this. And moving into the next piece of news, the final piece of news for the market movements. And speaking of blockchains, we see Taurus also integrating into another blockchain they can now support, which is Stellar, and specifically for both their tokenization services as well as their custody services. Those being Taurus Protect being the custody platform, Taurus Capital being the tokenization platform. And the idea here, obviously, is to offer, infrastructure for both banking clients and non-banking institutions, leveraging Stellar. Stellar being known for, faster transactions, lower fees than your maybe Ethereum and comparables. So really cool to see this. And we've already seen multiple institutions already use Stellar, such as Franklin Templeton with their Benji, as well as Wisdom Tree with all 13 of their 40 Act funds. Circle is already on Stellar as well. And then according to the article, people that are already clients of Taurus that will now be able to use Stellar as well include Deutsche Bank, Credit Suisse, Santander, to be able to issue, customize, and manage any tokenized asset with greater ease and security, as the article puts it. Any comments here, Kyle?
Stellar has been super active in the space for a long time. I think this is a blockchain that many from 2017 may have expected to go the way of many of the others of that era, which was to fall into irrelevance. And I have to give the Stellar team a lot of credit for continuing to drive adoption and working with large financial institutions to continue to stay relevant and to really solve a need in the market and to work to onboard more and more capital into the digital asset ecosystem. I think that Stellar and their team deserve a massive, massive round of applause for just continuing to drive that. And Taurus seems very interesting. They are onboarding banking institutions, helping them, interact with this blockchain ecosystem. And I think this partnership makes a ton of sense. And Stellar continues to be a viable alternative solution to the Ethereum product that we see most public blockchain issuers using still to date. Stellar does seem to be one that continues to hang around and continues to solve a particular need and problem in the space.
Absolutely. And Kyle, actually a question for you. This is a public blockchain, right? Stellar, whereas the previous article we had covered sounds like it will be at least, permissioned, which is the global layer 1. How do you feel the future looks like for institutions? Like, are they supposed to eventually migrate over to public blockchains? And obviously there's a heated debate that happens all the time, but I want to get your take on this, given the recent news. And institutions are involved in both.
Yeah, no, I mean, the easy middle of the road answer is that both will be applied in different ways. My gut originally was that, semi-permissioned networks, which I guess would fall in the permissioned category, are going to be the ones that drive the most adoption. That being said, the internet is a good example of a non-permissioned network that everyone uses, right? Everyone uses cloud data storage and all of these things, which are technically on the the public internet protocol. I think that you do need to have the underlying foundational layer that connects everyone together is a public network. So if I had to fall on one side of the table, I would say that the public network, the open style of network, is what we're going to need to actually drive significant traction. You look at how open source is often the most innovative solution because of the fact that everyone can participate. You also look at how a lot of private networks end up building a lot of the same things over and over and over, right? Each individual company has to reinvent the same wheels, and that doesn't seem like it's the most efficient solution. So from my perspective, I think what you're going to see is a continued adoption of what we're already looking at, which is you have these foundational layers of public data transfer and communication tools between all these different networks. And then you slowly, as you go up the funnel, increase in that kind of private permission sector, whether that's building specific layer 2 solutions that are permissioned, or if you have specific application layer solutions that plug into the blockchain that themselves are permissioned, like the GSDApp or something along those lines, which are the proprietary distribution mechanisms into the investors and the high net worth individuals. I think there's always going to be a gate there that the institutional guardians are going to want to hold, which is who their network is, how they're getting these things fundraised, who the investors are, where the capital is coming from. I think that's always going to be a choke point. But the communication from node to node, from bank to bank, is likely something that, as we transition towards the future, is going to be an open and public solution.
Makes sense to me. You want to go where the money is, where the people are, or as Sid from Maple puts it, where the liquidity is.
That's right.
And a lot of times. So fantastic. Well, with that, everyone, we are closing out the market movements, diving into the token debrief. Those were the market movements, all great things going on in the space, but wait, there is a whole lot more. So why not jump into it with Securitize and InvestCorp, a 52 billion AUM alternatives asset manager establishing a partnership to tokenize funds, starting with InvestCorp's Strategic Capital Group, which manages 1.5 billion, acquiring minority interests in alternative asset managers, particularly GPs who manage longer duration private capital strategies. Now, of course, it's expected that InvestCorp will expand their tokenization efforts across their broader GP partners. Now, speaking of partnerships, we also saw Raise Finance announce they'll be working with Texture Capital to enable secondary liquidity for their tokenized assets via Texture's SEC-registered ATS. Brian Anderson and Tim Stoddard from Raise, as well as Texture Capital's Richard Johnson, are all friends of STM, and both firms spoke at Tokenize this 2024. You know, we're always excited to see collaboration across the industry, and of course, we'll be tracking any trading tokens from this partnership on stm.co. Now, shifting gears to money market funds, the first one I want to cover is Archax, working with Quantos and Algorand to make their tokenized shares of an Aberdeen money market fund accessible on Algorand. The cash lag for this to work is solved by using the EURD electronic money token. Now, next on this topic, you may remember Mountain Protocol's USDM from the market movements, but here they are again with now allocating part of the reserves into the BlackRock BUIDL liquidity fund. Now, changing it up a little bit, next we have Standard Chartered releasing a report around trade finance with a prediction of the tokenization market reaching $30.1 trillion within 10 years. So that puts us at 2034, with 4.8 trillion of that being made up of on-chain trade finance, which we've seen multiple examples of already, including Citi India's letter of credit and Project Guardian issuing tokenized asset-backed securities backed by, you guessed it, trade finance. And speaking of Project Guardian, the MAS initiative is welcoming a new participant, S&P Global Ratings. Unlike past Project Guardian initiatives in the wealth management space that we have covered, S&P will be joining the fixed income workstream, quote, developing analytic frameworks, assessments, and benchmarks in the digital assets and tokenized markets. Now, in less favorable news, we're going to have to say goodbye to New Fund as they have recently shut down their security token platform in light of a regulatory gray area. No legal action was taken against the German startup, according to the article, yet requests for guidance were not answered due to fear of new technologies, according to their CEO, Zoe Adamovich. For anyone that did participate, however, in their platform, not to worry, they will be maintaining it, including all equity tokens and wallets and post-investment activities. Now, last but not least, we have Nomura's Laser Digital finalizing their digital asset license in Abu Dhabi, which allows it to operate as a broker-dealer and asset manager for crypto and traditional assets. Laser Digital has been active with their Libre platform, their fund tokenization platform, launching back in January, and expected first users do consist of Brevin Howard and Hamilton Lane. Now, this new license with Abu Dhabi surely will bring in new exciting issuers from the UAE area, and we'll be keeping an eye for all of it. But with that, that is the Token Debrief. Let's head over to Kyle and find out who his company of the week will be this week.
All right. What a great episode. Unfortunately, we didn't have Herwig or Nico in our market movement segments, but that doesn't mean that Jason and I couldn't hold it down and bring you some amazing news. And then, of course, he took it away and crushed it during the rest of the Token Debrief. But I am here to close it out with my favorite segment. And anybody listening, you know we couldn't have an episode of the Security Token Show without our companies of the week, or in this case, the company of the week. I get to pick who is the winner for episode 241. As you know, anybody that wins Company of the Week is nominated for our Company of the Year award, perhaps the most illustrious award in the entire security token, perhaps dare I say, blockchain, Web3 tech world. I think this is maybe the biggest award ever in history. At least that's one man's opinion. And in this case, the Company of the Week, which is our nomination into that illustrious award, my winner this week is Laser Digital. Now, you may not have heard of Laser Digital before. Really, what they are is they're actually a subsidiary of Nomura. Nomura is a banking institution. They are crushing it. It's Japan's largest securities firm. They launched Laser Digital, and they have announced today that, or excuse me, a couple days ago, that they have completed their licensing process with the Abu Dhabi global market, and they are now able to participate in digital asset transactions in the MENA region. So last September, they announced that they were able to act as a broker-dealer and an asset fund manager for crypto and traditional assets. And now they are approved to do business in the Middle East region. They also have a license from the Virtual Asset Regulatory Authority in Dubai, as well as they work with many other companies in the industry. So Laser Digital particularly has a three-pronged strategy. They want to do venture investment, they want to do asset management, as well as digital asset trading. But the trading piece of that hasn't gone live yet. But having a license now allows them to do that in a regulated manner in the Middle East. So this is, I think, an exciting prospect. Nomura launching a institutional counterparty that can now transact not only with themselves and with their institutional partners, but now it has full regulatory license in Abu Dhabi. So for that reason, Laser Digital wins my Company of the Week. And with that, we thank everybody for tuning into this week's episode of the Security Token Show. It's always been a pleasure. Please like, subscribe, do what you do. Also, you can leave me a message on LinkedIn or X, which I almost said Twitter, which is why I got stumbled up there. You can message us anywhere, as well as to go to any of these security token market channels, or go to stm.co to find out more, to read trading data, to see what's going on in the market. We also published a book on Amazon, Blockchain Explained, if you want to learn more about the blockchain industry. And you can tune in next week to STM to find out next week's episode of the Security Token Show that comes out every Friday. So thanks again for listening, and we'll talk to you next week. Happy tokenizing.